Hello friends, this is Aryan. This video is brought to you by Crypto, and in this video we are going to learn how to read candlesticks. Now, before we learn how to read candlesticks, we will first learn what are candlesticks. So candlesticks are nothing but a method that is used for technical analysis. All right, it tells us about the price action of the asset. And why do we need to learn candlesticks, or why do we need to read candlesticks? See, every candle tells us a story. All right, it tells us where the price was, where the price is, and where the price is probably going to go. It also tells us about the psychology behind the price movement. Now, and it also helps us to plan our trades better. All right, so let's try to understand this. See, you can see there are two candles on your screen. There's a green candle and there's a red candle. Obviously, the green candle implies that the price moved up, and the red candle implies that the price moved down. Now, how do we understand this? See, if the open, you see there's an open price. If the open price is lower than the close price, that means that the price moved up, right? So, for example, if I say on 21st April, the price of an asset opened at 100 and it closed at 105, then a green candle or a bullish candle will be formed. Right. Similarly, a red candle will be formed when the open is higher than the close. That means that, for example, if an asset opened at 100 rupees and it closed at 95, that means that the price fell. Right. Now, you see there are two wicks or shadows to the candle. Right. There's an upper shadow and there's a lower shadow. The high of the upper shadow is the highest price that the asset went on that particular day, or in that particular minute, hour, or whatever time frame, whichever time frame we are using. And the lowest point on the lower wick is the lowest price that the asset went. And this is same for both. However, if you see that the close and open are totally opposite. See, the close is higher in the green candle and the open is higher in the red. But the high and low is the same. The high of the green candle is same as the high of the red candle, and the low of the green candle is same as the low of the red candle. Right. Now let's move ahead. And what are the implications of these three things, which is the wick, the body, and the length of the candle? So you see, these two lines are the wicks. The line up is the upper wick, and the line down is the lower wick, or you can also call the lower shadow or upper shadow. Next is the body. Now the body is basically this part of the candle. All right. And the third thing is the length. So the length is basically the body plus upper wick plus the lower wick. Now, each of these three things imply something. The wick implies price rejection. All right. What the wick tells us is that from which level did the price started getting rejected. Right. So here we can say that let's take an example. The asset opened at 100, went up to 110. But at 110, the sellers became active and they rejected the price. And finally, the asset closed at a price of 105. Right. Similarly, the lower wick tells us about the bullish rejection, or we can say when the buyers push the price above. Right. So, for example, if the asset opened at 100, went all the way down to 95, but it got rejected as the buyers became active, the bulls became active, the price of 95 got rejected and the price moved up. All right, so upper wick is basically bears rejecting the price, and lower wick is bulls rejecting the price. And this is the same for both red and green candles. Next comes the body. The body tells us about the strength of the candle. So this part is the body, and the bigger the body, the stronger the candle. So if there is a big body green candle, that means that the bulls are very, very strong. And if there's a big body red candle, we can say that the bears are very, very strong. Next is the length or the volatility, which tells us about the volatility. Now, what is volatility? Volatility is basically the daily range of the asset. For example, if I say an asset has a daily range of about 10 points, that means that if it opens at 100, it will generally move within 10 points. So it will, the highest will go is say 110 and the lowest will go is 90, right? So when we see that the length of the candle has increased, all right, compared to the previous candles, then we can say that the volatility in the market has increased because the range has increased. All right, now how do we understand how bullish or how bearish a candle is? Let's take an example. Here you see this is the most bullish candle you see. Why? Because it has no rejection. Right? There's no upper rejection. There could have been lower rejection because lower rejection is bullish, but upper rejection is bearish. So this is a very bullish candle. Why? Because it opened at a price, for example, say 100, went all the way to 110 and stayed there and closed there. So there was no rejection from the sellers or the bears. Next, you see this candle is still bullish, but there was some presence of the bears. Here, there's no presence of the bears. Here, the bears were present. They did push the price down, but however, the bulls were very strong. Here, you see the bulls took the day, but they weren't very strong. Why? Because there's a lengthy upper wick, which means that the rejection is good. So the bears are becoming stronger. And now this tells us that the bears are rejecting the price, but the bulls are not able to reject any price. So here you see there's an lower rejection as well. That means that the bulls are also rejecting, but here the bulls are not rejecting anything. The bears are rejecting the price. So though the day was bullish, but the bears were very, very strong. And this is a completely bullish candle. This is the completely bearish candle. This is the most bearish candle you'll see. Why? Because there's no lower rejection, right? Now, let's study about a few types of candles which you will generally see in the market. So this type of candle is called the pin bar. All right. So a bearish pin bar is when the upper wick is longer, and a bullish pin bar is when the lower wick is longer. And the reason is simple. When the upper wick is longer, it means that the higher prices are getting rejected. Right. That means it's bearish. And if the low prices are getting rejected, that means the market is bullish. This is the Marubozu. Now, the Marubozu is a candle which has no wick, all right, and it opens at a price, makes a high, and closes at the high. Now, this tells us that there is no presence of the bears, right? There's no presence of the bears, then only there's no rejection, right? So this is called the Marubozu, and similarly for the bearish Marubozu, as it opens at the price, goes down, stays there, and closes there. And this is hammer and the shooting star. So hammer and shooting star are totally opposite, right? You can see that the hammer has a long lower wick, which means bullish, and the shooting star has a long upper wick, which means bearish. So they imply totally opposite things. This implies the market is bullish, and this implies that the market is bearish. All right, now let's move to the crypto app and have a look at the charts.
We studied hammer. So this is a hammer. Why? Because it has a long lower wick, which tells us that the bulls are very active and they are rejecting the lower prices, and the price you can see moved up from here, right? Let's try to locate a bearish candle now. You see, this is a bearish candle. Why? Because it has a big red body, which tells us that the bears have strength, and the wicks, upper and lower wick both, are very, very small. So that tells us that the rejection is very, very less, right? Okay, let's try to find a candle where the volatility increased a lot. Okay, you can see here the candle is bigger than the previous candles. You see, this candle is way bigger than these candles. This tells us that the volatility had increased. Why? Because the price opened somewhere here, it went all the way down to here, moved up, and closed slightly lower than the opening price, right? So that tells us that there was a lot of volatility, and the range of on that day was very, very big, right? Let's try to find an indecision candle. Now, what is an indecision candle? An indecision candle is where the body is very, very small. It's almost not there. It's almost as if it's not there, and the wicks are long. You see, here is an indecision candle. It's also called as a spinning top. All right. You see, the upper wick is long, the lower wick is long, but there is no body. That tells us that the bulls and bears were fighting. Nobody won in the end, but the price moved, gave a high and gave a low. All right. Let's try to find a few other candles. You see, this is a shooting star, right? Why? Because there's a lot of uh, upper rejection. You can see that the upper wick is pretty long and the body is small, and you can see that after the shooting star the market fell. It fell all the way to here, right? So this is it for the first video on candlesticks. I'll be making more videos on candlesticks and we'll learn more about candlestick patterns. Bye bye, take care.